Hello, welcome to East Asia Monitor. Today I will talk about Japanese economy of this year 24 as a nine report. Well, nine report is produced and uploaded on YouTube on the 9th, 19th, and 29th. That's why it is a nine report. And I'm a Korean, and I majored in comparative political economy with a focus on Japan. MIT and has been working in Hong Kong, China, and Japan for about 20 years. And I'm making this show in Seoul today. Now, today we'll talk about some remarkable development in the Japanese banking or financial policy or administration in terms of indirect finance. I think you should be familiar with this term, indirect finance, as opposed to direct finance. Direct finance refers to individuals and households' investment in the firm through stockbrokers, but they pick actually the stocks and bonds of a particular firm. So that is direct between the investor and the recipient of the money. But if you go through a bank, if you deposit some money in some bank, and inside the bank, if they make investment decisions, you get to have some share in some particular company through banks. So it is indirect finance. Well, indirect finance has been a major central mode of Japanese public financing even before from the prior period, because indirect financing has been used by the Japanese government for political purposes, administrative, for war preparation, war execution, war infrastructure building, etc. So in a sense, people's savings has been used by the central government for the political and administrative purposes. So indirect financing has been a major mode of finance in Japan in the post-war period until lately. Actually, the stories similar stories, taking place in Korea too, because many Korean systems are modeled after the Korean Japanese systems. Now the Japanese government has decided to promote a direct finance and, in a sense, regulate indirect finance. So this is official statement. I mean, today you can find this on the Japanese government's Prime Minister's Cabinet Office. They declare that Japan's financial system is indirect finance, mediated by financial institutions centered on banks that account for a substantial proportion of corporate finance. From the corporate standpoint, loans from financial institutions account for 39%, which is indirect, while direct finance through stocks and bonds account for 36%. So the Japanese government thinks that 39% should go down. But actually, if you recall those period of Japanese economic miracle of the 60s and 70s, I think that indirect financing was about 60% compared to 30 or 40% of direct finance. So post-war Japanese finance has been absolutely the dominance of indirect financing over direct finance. It's now Japanese government is wants to have this fixed. Well, the background is, if you look at the figure on the right side, on the top left we have savers, investors. He or she has two channels. One is they save in the financial intermediaries such as banks or savings institutions, and banks actually make investment decision, which will include stocks and bonds of companies. So that's why it's indirect finance between the individual and household and the corporations. But direct financing is, administered by the stockbrokers in security companies, because they buy or sell the stocks and bonds of companies at the order of individuals, account owners. So this is direct. I mean, individual citizens' intention is directly inflected through financial market in their ownership. So Japanese government, to make their economy more advanced, more Western-like, they has been trying to expand the direct financing compared to indirect financing. So background was, indirect finance was good for mobilization of industrial funds. People, save, very diligently, and then forget about the outcome. Then government exercise influence on the banks to, use the money, to mobilize the money for the government purposes, even including war. Okay, so that's why cooperation between government and business was really basic middle layer infrastructure of this, indirect financing. Also, the Japan has another particular phenomenon compared to Western, particularly Anglo-American economies, that they have these groupings called the cadets, Mitsubishi, Sumitomo, etc. And they all have banks. So they are all bank-centered. Sumitomo, even though the names have changed, but Mitsubishi Bank, Sumitomo Bank, Daiichi Kangyo Bank are all nationwide city banks. And they are actually all the core member of the groupings, usually 20, 30 groups, where the groups have banks and the trading companies and stockbrokers, and then manufacturing firms. So until 1989 is very important in Japanese post-economic history, because that is the day of bubble crush. And up to that time, since 1945, basically one paradigm of economic development, one paradigm of financing continued. And then we had 6 business groups: Mitsui, Sumitomo, Mitsubishi, Daiichi, Kangyo, Sangwan, Fuji. If I recall, in the heydays of the 70s, each group has in average about 50 firms altogether. And each firm also has a subsidiary. So if you pull Mitsui Group at that time, you're pulling about 200 firms. Most of them are actually listed. So 6 groups might have stand for really like 40% of entire output of the economy at the time. So groups had been dissolved. Now, the Japanese government is trying to actually change the working mode of the bank toward the actual expansion of direct financing managed by stockbrokers. Well, this is stock price. No, this is the actually portion of stock market over percentage over bank asset. So if you look at the graph, the peak in the middle is 1989, starting from 1954. So in the post period, the graph has been increasing slowly, but still, if you look at the graph up to 70s, even early 80s, the graph stands for about 30%. That means stock market entire volume is only 30% of bank asset volume. So this clearly shows, even still today, Japan in the post period has been bank-centered, not stockbroker-centered financial system. So the peak was that is the stock market's capitalization peaked 80% in 1989. That was really Japanese huge bubble. And in that year, bubble busted, which was very important turning point in the post-war Japanese economy. Since then, even though stock market share over bank asset has been increasing, it is actually on the 40 to 70 degree. But overall, Japanese post-war finance history is a history of stock market share increasing compared to bank asset. And there are several incidents around that after 1989. There's a Plaza Agreement in 1985. So the Japanese government had more influence of the American government in actually the requirement that Japanese finance system should be improved. So base rate cut in 1986, and then stock price peak in 1989, and then Japanese government at that time, before 1989, actually bubble burst had a tremendous impact on Japanese real estate market, because Japanese banks had huge surplus cash, and if they lack the investing skills, the easiest target was actually the real estate development. Very easy. I mean, just loan to real estate developers, and you get interest, because at that time Japanese real estate market was really booming. Everyone was trying to have a house, and so many construction works have been or actually developing inside and even outside Japan. So the bubble burst, and then from then on, in a sense, Japanese economy has lost the steam power. So even though it is still one of the leading advanced economy, it's actually its vigor, its power, its influence is now actually has shrunk compared to a pre-1989 period. So in terms of stock price, it clearly shows there are several incidents. The peak is 1989. At that time, stock market prices index was 38,915. Now the point is, it has been broken. That record has been broken very lately. Only several days earlier, February 22, Tokyo stock exchange hit the record high of 39,089, which is higher than 1989 figure. So the point is, Japanese stock market is now back and prospering. In the meantime, we had very difficult period. In we have an IT bubble. Then we have actually a Lehman shock, and also in 2011 we have a huge earthquake in East Japan. So Japanese economy went through this difficult accidents and incidents, and now Japanese economy, particularly the stock market, is reviving. Is the key point of today, and that's why we read lots of articles on about Japanese stock markets. Now, then, are we going to see the shift from bank-centered indirect financing to stockbroker-centered direct financing from now on? This is a really very important question on the Japanese political economy, on finance economics as well. First of all, we need to find out whether deflation is over. I mean, Japan, since 1989, Japanese economy has been going through a very dark tunnel of deflation. Now, are we out of it? Is it over? After 2020, recovery of economic activity after the COVID-19 emergency and the rising energy prices due to the Ukraine crisis, and now emerging inflation in Japan with rising wages. So many economists in Japan, I think that now those really long dark tunnel of deflation is over. So we are entering era of inflation pushed by the financial markets. So in this milieu, this is actually Tokyo Stock Market Reform Plan is declared by the organization that administers Japanese stock markets. So this is, in a sense, Japanese government plan. Tokyo Stock Exchange called for improvement measures for the firms with low PBR in March 2023. So that means, hey, Japanese firms, get away with the old way of, price to book ratio accounting. Really import the American style PBR so that, stock price gets actually, particularly those with, PBR lower than 1. That is book price, stock price is lower than book price. Those firms with, PBR lower than 1 should change their actually bookkeeping measures, and the Tokyo Stock Exchange called ask for them. So if your firm is listed in the Tokyo Stock Exchange, you will get the order. Request that, hey, you should actually revise your bookkeeping practice so that stock price should reflect the reality in the market. So the Japanese government is expecting to induce a kind of cycle of corporate value enhancement will lead to increased investment return and which will lead to reinvestment. So now stepping away from the previous indirect financing where the bank loans are the actually fuel for industrial development. Now Japanese government is eyeing it at the new mode that stock market and the actually investment from the stock market is going to be a fuel for Japanese firms, production and investment. Also, there are several pieces of this new Japanese initiative under the Kishida administration. But another, one I want to mention is new NISA, Nippon, Japan Individual Savings Account. To persuade Japanese citizens to invest in the stock account and not bank, we have this particular policy to induce citizens from indirect financing, bank-centered, to direct finance, stock market, savings practice. So taxation is usually about if you get a profit by investing in some ABC firm in Japan, tax was about 20%. Now it's going to be zero. Tax exemption for asset management in NISA account. Okay, that is dividends and profits from sales are fully received. So this is huge inducement. Okay, there are two types of investment under this program. One is accrual investment, another growth investment. Annual investment cap in accrual is 1.2 million yen. If you think that the average monthly salary of average salary demand of 40 years old is about 500,000 a month. So 1.2 million is about 2 months salary of average Japanese salaryman, I think. So that's accrual investment. But growth investment, the non-taxable holding is 80 million for accrual and 12 million for growth. But growth investment is more active because, this is really active investment. Target product of accrual investment is just investment trust. This is secondary in a sense, passive. But growth investment is stock, trust, ETF, and REITs, real estate. So these are really alternative investments, very aggressive. So this may sound very simple to the people in New York or London, but the statement that average Japanese salaried person invests in ETF and REIT is really something remarkable, something surprising in the Japanese sense of finance. So this much Japanese government is trying to promote stock market, direct market through these, all these, policies. Other investment actions, that is, continuing of central banks of financial easing at a new level. I mean, provide, supply more money into the market. Keep spending, keep, pouring money. Then structural reform of Japanese companies requested by Japanese stock exchange. I mean, listed firms. So have a really, introduce more Western American-like corporate governance reform. And Japanese firms' earning improvement should a dividend expansion, share buyback, expansion of foreign consumption. So stepping away from the past practice of just giving bonus to employees, Japanese firms should really join this direct investment schemes as a player. Okay, also wage increase for large enterprises. Okay, this is a really central points of the new Japanese government's finance initiative. If you have any point, any subject for me to discuss, please let me know. Thank you very much.